Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 great tech ETFs, so let's get into it. Alright guys, welcome back and thank you all so much for being here. ETFs, or exchange traded funds, are a great way to get easy diversification across a broad spectrum of stocks. Now, many of them focus on the overall market or different indexes like the S&P 500 or NASDAQ, but some narrow in a bit further to overall sectors. Now, we can get even more specific with different niches, such as cybersecurity or semiconductor chips, but today we're going to focus on the overall tech sectors and a few ETFs that are leading the pack. And just a friendly reminder before we jump into these tech ETFs, if you enjoyed today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel. Links to download the TipRanks mobile app will be in the description down below as well. Now let's dive right in. The first tech ETF we're taking a closer look at is the Technology Select Sector SPDR Fund. This ETF trades under the ticker XLK, currently priced at $148 per share. They have assets under management of $43 billion and an expense ratio of 0.1%. The stock is fairly flat over the past year, but has seen gains of 17% in the last few months. XLK tracks the technology section of the S&P 500. They seek to provide precise exposure to companies from technology hardware, storage and peripherals, software, communications equipment, semiconductors and semiconductor equipment, IT services, electronic equipment, instruments, and components. Their ETF is comprised of 68 different holdings, and the top 10 holdings make up 69%, so pretty heavily weighted in those top companies. And no surprise, at the top of those holdings are some tech giants, including Apple and Microsoft, who both hold about 23% positions within the ETF. Further down the list, we have plenty of big names, including Nvidia, Broadcom, Cisco, Salesforce, and many others that you'll recognize as you scroll down the list. While many new and growing tech companies don't pay a dividend, some of those bigger established ones certainly do. So the ETF does actually pay out a dividend as well. Their quarterly dividend currently comes out to 32 cents per share for a dividend yield of 0.89%. While Wall Street analysts don't rate ETFs individually, TipRanks is able to calculate a rating based on all of the individual holdings within the ETF, and the XLK comes in as an overall moderate buy. That is based on over 1,000 analyst ratings on the XLK holdings. The average price target works out to $160, which would be an upside potential of nearly 8%. We can see here some of the stocks with the highest upside potential, as well as the ones with the biggest downside. Next up, we're going to take a look at the Invesco QQQ ETF. Now, this is not technically a tech-focused ETF, but is heavily weighted in the tech sector, and is one of the largest ETF products in the United States. The QQQ ETF trades at $317 per share with a massive assets under management of over $171 billion. Their expense ratio is slightly higher than the last at 0.20%. The stock is down 7% this past year, but has been making gains back the last 3 months, up 16%. The QQQ fund is based on the NASDAQ 100 index. They showcase underlying holdings from multiple sectors and industries, but like we said, the tech is at the forefront, with information technology comprising 49% of the ETF. And that tech focus is definitely reflected in their top 10 holdings. Now, this ETF is a bit bigger than the last, comprised of 101 stocks. Their top 10 holdings make up 55% of their ETF, and big positions are given to names like Microsoft and Apple, of course, along with Amazon, Nvidia, Google, Meta Platforms, and Tesla. This ETF also comes with a dividend of 47 cents per quarter for a dividend yield of 0.68%. With over 1,700 ratings on the individual holdings, the QQQ ETF comes in as a moderate buy. The overall price target comes in at $356, which would be an upside potential of over 12%. Once again, down below, we can see the stocks with the highest upside potential and those with the biggest forecasted downside. And third on our list has the most holdings of the day with the Vanguard Information Technology ETF. Trading under the ticker VGT, they're currently priced at $380. Assets under management is nearly $46 billion, and we have an expense ratio of 0.10%. They are fairly flat looking at the past year, but once again, we've seen some gains these last 3 months, up over 16%. The Vanguard Information Tech ETF seeks to track the performance of a benchmark index that measures the investment returns of stocks in the information technology sector. Now, this ETF has a whopping 366 different holdings, but still their top 10 make up over 60%. And you may be starting to notice a theme with these top 10 tech holdings. In our top 2 positions are Apple and Microsoft, holding 22 and 18% positions. They're followed by Nvidia, Visa, MasterCard, Broadcom, and Cisco, and a lot of other recognizable names as we go down the list. This ETF pays a quarterly dividend of 77 cents per share for a dividend yield of 0.79%. And with over 3,200 analyst ratings on the ETF's holdings, it comes in as an overall moderate buy. The average price target comes in at $417 for an average upside of 9.7%, with we have some pretty big upside potentials on some of these smaller stocks within, and of course the biggest downsides over here. So there we have 3 tech-focused ETFs, and if one thing is certain, it's that Apple, Microsoft, and Nvidia are at the top of many tech investors' lists, dominating that top 10 holdings list. Now, you guys know I always love hearing from you, so let me know your thoughts on these ETFs in the comments and what other tech-focused ETFs you love. I always appreciate hearing from you guys. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.